You see, the unwritten rule of global finance is brutal, but sick. Okay, the question then is, how does currency actually bypass the US dollar hall? Well, because it functions as something called bearer asset. And you see, bearer asset is a financial instrument where, listen now, where possession, whether physical or digital, directly equates to ownership. It settles instantly, peer to peer. Think of handing someone a physical gold bar in an alleyway. When you have money in the bank, that's just an IOU from the bank. But with a bearer asset, the moment I hand it over to you, you own it straight up. It settles directly between wallets, which removes the correspondent bank from the middle of the transaction. There's no intermediary routing the payment, which means there's no US correspondent bank involved to freeze or reject the transfer. If bypassing correspondent banks is as easy as sending tokens from wallet A to B, you then have to think about the question such as why you have to go to the trouble building a complex, highly publicized legal framework. Why not just quietly use shadow networks to move those bearer assets? You see, it's a good question, but the problem is staying off the radar in global dollar system is incredibly difficult. And the consequences of getting caught operating outside regulated dollar system are pretty severe. You see, the unwritten rule of global finance is brutal, but simple. You comply or you lose your dollar access, period. Now, that is exactly why you have to build a legal. That's the exact reason why you need a format framework to avoid that risk. It's a massive geopolitical chessboard.